Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one more volatile week in this Wall Street, and there are very interesting things that are happening. If you are looking at the market, we will discuss it one after another. So let's start another session of our USA weekly market report series. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, it's after Brexit. It seems that the individual policies of Britain is coming out directly, and there are more blunders than any I would say sane things that you can see coming out of it, and now it is troubling their economies. Now it is literally troubling their economy, and we will also in this session we will also discuss about the British pound, which is at the lows that it has tested I think 20-30 years back. So we'll discuss about that and the kind of policies they are building without understanding basic economies economics. And if you want to do fiscal things, fiscal measures, you need to understand how your current situation of your own individual economy, how is the overall structure of your economy, how geopolitics is working, how other things are working. So you have to consider whole number of things before doing any fiscal measures. And if you are just want to do some populist thing, then it will be a different case. So let us see. The currency is actually getting trashed like anything. Okay, that's one thing. Then Jamie Dimon says expect other surprises from choppy market after UK pension nearly imploded. So he is also talking or referring about the same thing. Then you have this this is the sole reason. This is actually troubling the entire Europe, and it is the time for each and everybody. It's not the responsibility of for one. I would say it is time for each and everybody, also the Europe, to understand what is good for them and do things accordingly. Now, apart from that, one thing which is very much visible as far as the US stock markets are concerned, as you can see, Chile has outperformed other emerging market and the S&P 500 this year. Obviously, there are some long-term dynamics because US market has been making phenomenal moves in the last decade, which means after from 2010 to 2020. And then if you are looking at the 10-year period, and if you are comparing with other market, US is shown is phenomenal strength, and it is moving on the upside, or in the entire US market has been outperforming compared to other markets across the globe. Now obviously when you have 10 years of expansion, the stock market will definitely take some time, okay, before it actually started doing anything. And now we can see that the market is actually adjusting itself even after good data. So generally the good data is bad for stock market, and bad data is good for stock market. So things are working, or things will work in the stock market in a different way. Okay, we will discuss about that, how the stock market has indeed behaved. Apart from that, Trump won't be the Republican nominee in 2024, ex-GOP House Speaker Paul Ryan predicts. So let us see. This kind of prediction are something which we don't know. These are based on news, but we will see who will be the next face of the Republican Party other than Trump. Apart from that, I think apart from that, we will directly move to the stock market and how each and every things have started moving, because most of them are related to geopolitics, and that is something which we should keep aside beyond a certain point, because those are literally different dynamics which takes time and which takes experience to understand. Okay, our basic understanding is about the stock market, so we will do our best to understand that. Now, the last Friday was pretty bad one. Dow Jones closed 1.34% or 400 point down. Nasdaq closed 3% down or 327 points. Then we have S&P accumulative impact of the 2.37%. After that, gold closed at 1650, so this is not at all looking good for gold. Apart from that, oil is down by -4%, so this is something which is good. I don't know whether it is because in terms of US market, anywhere they have some production, but it is also good for them as well. The 10-year yield is now above 4%, and I think this is what I have said couple of months back. I've been saying this thing again and again because the kind of strength US 10-year yield has been showing is indeed phenomenal. Apart from that, VIX is substantially higher. Okay, then we have so the commodities, because the cumulative impact of global central bank to curb the inflation has a direct impact on overall commodities, so this is a direct example of that. Apart from that, the risk has increased substantially, I would tell you, because I've been saying this again and again and again that I'm looking at the 3-month and 30-year. Okay, and now because everything has crossed, 30-year is 3.99. if you exclude 3-month, everything is above, or it is above 4%, or it has already crossed the 30-year yield, which means the near term risk in the next 1 year, 2 year, 5 year, 10 year has increased substantially. And if you are looking at the 3-month is showing 3.72% and 30-year 3.9%, so they are very, very close. And once things change, once 3-month crossed above 30 years yield, you will see something very big. I mean, whether it is on the upside or downside, that would be something to look at, but probably on the downside. Think will be on the downside, that's for sure. We will also talk about dollar index, which is showing phenomenal strength. So all in all, things are not at all looking good, that's for sure. Okay, the stock market has already been corrected quite a lot, but if you are looking at the bond market, it is not at all showing the bottom. It is indicating that the worst, or I have said one thing, that we are probably at the last leg of the correction, so the worst is yet to come. Yeah, when everybody started running away. So let us see who will be the last person to hold on to this volatility, to hold on to this, I would say, great danger, if you want to consider it. But bond market is not at all indicating good things. Now I have said that the one thing which we are going to discuss is pound. Beg your pardon, I have typed pound, not pound. So British pound, US dollar. So this is the monthly chart. It may not be visible properly, so what I'm going to do, I'll use the Heiken-Ashi chart, which will be the average, nothing else. Okay, just to give you a representation. So Heiken-Ashi, as you can see, the lows of 1985 and the lows of 2022. This may be an opportunity, this may be a threat, because if you think that now we are testing the biggest support level as far as GBPUSD is concerned. Now let me tell you one thing, the US economy is literally getting fragile day after day, and the flip-flop in the policies, it is not a playing ground where kids started playing and do their wishful thinkings. Okay, so even if it is testing the biggest support, if it falls below 1.08, it would be a very big problem, because let me tell you, the policies are not stable, and we have seen how the recent finance minister has just thrown out, because, and these kind of indications are not good. That's what I want to say. Okay, so let us see. So 1.08 will definitely be a big support, and if it falls below 1.08, pound will be in great danger. That's what I can say. And why? Because currency has lots of potential to damage the entire economy and the system. Okay, so let's hope for the best. Let the sanity prevail. That's what I can hope and pray and say. Now, with having said that, let's go to the dollar index. Now I have released one video as a short regarding dollar, because dollar, if you are holding it for the next 6 months to 1 year, I mean if you have a long term view, the indicators have already stretched. Okay, but I'm talking about monthly charts, so it will definitely take couple of months before it actually peak out, but you can see it has already been started. So the indicators are running out of steam. It may go up to 121, 122. I mean, some people would also think that it will go back to the highs of 1985, but the US economy is not in a situation to handle those 160 kind of highs, because that time when the dollar was so strong that it actually hurts their own economy, and probably that time they don't have the kind of money sloshing into the market, and QE1, QE2, QE3, QE free, these kind of things were not there. And right now the overall debt to GDP of US economy is far higher than when you compare 40 years then and now. So things are not as equal as it's 40 years ago. So doing or thinking beyond a certain point is actually not good. So I have been said that, and I'm saying the same thing again, that the resistance that at least I am looking is in between 119 and 122, and probably in the next couple of months I would say that the dollar index has already started peaking out if you are looking at the long term, but that's a long term thing. And once we'll see further indication or moves, we will definitely intimate you. So for the short term, that's a different scenario, it is showing strength, but for the long term you have we are currently trading at 113, so 9 points on the upside is what we have left with potentially. And this time if dollar falls, let me tell you one more thing, that because of this dollar strength, you will see many countries are now opting out from dollar, and they moved to the standard gold reserve, the classical gold reserve, and started trading in the bilateral currency. So this is what somewhat, I'm not saying that dollar is the entire world is dollar dependent when it comes to international trade, but the thing is the dependence will get loosen a bit. That's what I'm saying. So let us see what lies ahead for dollar index. That's for the, I would say, for the long term, not for the short term, whatever I have said. Apart from that, we will check out the VIX. VIX is indicating a move above 32, which is not at all a good sign, because a high VIX simply means higher volatility in the upcoming session. So things are not going to be as same as it looks like. So if the VIX continues to sustain above as you can see 28.72 or 29, then the range that we are looking at is 28.72 on the downside and 48.87 on the upside, until and unless there are two times a great financial crisis and the pandemic of 2020. These are the times when the VIX spiked up like towards 80, but there is no such situation as of now. So the range that we are looking at, so if VIX continues to sustain above 28.72, we will move towards 48.87 on the upside. So this is what we are looking at as far as VIX is concerned. Talking about Dow Jones, now Dow Jones and Nasdaq, I have updated the same kind of thing again and again. So if you are looking at, so this is the price chart of Dow Jones, and Dow Jones, if you're looking at the weekly chart, it is continuously closing below. As you can see, we are talking about the weekly chart, and each and every candle represent a week. So for the last 3 weeks, it's been trading below the 200-day moving average or the red line. Okay, and I'm talking about the weekly chart, which carries a lot of weight. So this is not at all a good indication if it continues to close below the 200-day moving average. Okay, so if it continues to do so, then the next support that we are looking at is 23,700, and that's what I have said in my previous videos. Some difference will be in the levels. That will happen based on the price action, but this is what you can see. So the Dow Jones is not at all looking good. Okay, talking about the Nasdaq, I think you will see similar kind of thing. It's fragile, and yeah, you can see the weekly chart, and it is closing substantially below the 200-day moving average line. Dow Jones is a tad bit better, and it is moving towards its 100-day moving average. Nasdaq, so I have talked about 8,000 levels, and it seems like it's about to become a reality, because 3% move on index. Obviously Nasdaq has performed quite substantially in the last 10 years, as I have already told you. So it does not mean that any big correction will change the trend if you are looking at the overall range, but in the short term the volatility is literally killing the market. So what do we have here as far as the big support for Nasdaq? It is 9,300 for the time being. Let us see what goes below that, because if it falls below 9,300, then the next support that we are going to look at for Nasdaq will be 7,700. So this is how things looks like right now. So what can we say here based on the price structure? And I think one more thing to look at is gold, because gold is now the gold future, as you can see, it's now officially broken down again, which means so the support level has broken down. So this is not at all a good sign for gold as well, because the bonds are moving like anything. I mean, above 4%, if you are getting world's developed market giving you 4% as a yield, bond yield, all the pension funds and all the institutions who are looking for safe money, previously they are hardly getting anything, and now they are getting 4%. That is a phenomenal deal for them. Okay, without doing anything, just park your money and you will get 4% at the end of the day. And it's not about couple of $100 or $1,000, we are talking about billion and trillions of dollars. So 4% of $1 billion or $1 trillion is way more than anybody can imagine. So okay, that's one thing. But talking about gold future, it closed below 1680. So the next potential support levels will be in between 1528 and 1457 on the downside. Okay, so please take a note of it. And things are really looking fragile as of now. Don't take unnecessary bet until and unless it is very important, and until and unless you have a sense of understanding about the moves going forward. Let us see what lies ahead, and a very big event is waiting for us, and it is just 20 or 25 days to go for the midterm US election, and hopefully that would be the time when things could turn and turn in a big way. That could be a major potential driver, but till then you will see huge volatility in the Wall Street going forward. So this is the end of the video. Thanks for watching.